Hello and welcome to another update video about MATIC. Probably one of the better setups in the market, quite clear actually. It is and it has been, and the market has reacted to various of our trading areas, support areas. Here we had a reaction to this Fibonacci level around 50 cents several times in September and October. Then we've seen obviously this as a wave 1 rally, a wave 2 pullback back then. A third wave rally back up here. We highlighted that a wave 4 pullback is due. I gave you another trading area, support area. The price reacted 3 times to it. This did lead to a profitable trade in a wave 5 of a larger wave 1. Yeah, we call that a wave 1 as soon as 5 waves up are complete, because you need 5 waves minimally to be able to present or represent a trend. So we now have an understanding that an uptrend is really unfolding. And then we've been looking for a corrective pullback, because after 5 waves, you typically have to consider that a pullback starts, because this entire move, in this case, that started on September the 11th, I think, is it? Yeah, 11th of September, this entire move needed to be corrected. 5 waves always need to be corrected by a 3-wave move. And then we have 5 waves up, 3 waves down. That again is a confirmation of a larger trend again, that the larger trend is up. And we've whenever we have 5 waves complete, we can work with that, add certain parameters to the chart in which the price should, or at which the price should find support. That worked out nicely. The price started to pull back in this wave 2, entered our new support area and reacted already the first time on the 3rd of January, then again on the 6th of January, and then again on Monday the 8th. And preferred interpretation is now that we are still caught in this wave 2 correction in this ABC structure, just that it's forming a larger one, A, B, C. That's my preferred interpretation. In this B wave, the price could still stretch a little higher, possibly to $1. And then I think it could form a top and the C wave down could start. Now, please be aware that B waves can even overshoot. So it only leaves me with a standard resistance on the chart. I cannot, that there isn't really a target for such a B wave. So we can always explore standard resistance first. That's typically my approach. And if that level breaks, then it might be something more bullish, but we will not be able to rule out a B wave until we see a clear 5-wave move up and a 3-wave pullback that are both large enough to suggest that the overall correction is already done. So to be clear, ideally the B wave is constrained by the $1 level, but I cannot rule out higher. As long as we only have 3 waves up, which would be an ABC structure, A, B, C, in wave B, I cannot rule out that we come down once more. So at the moment, bottom line is that's the preferred interpretation, A, B, C. And the support levels remain the same at 80.6 cents, 73.3 cents, 66.7 cents, and 58.3 cents. Below 58, the setup is likely going to fail, but I mean, there's always a risk. But at the moment, we're not even close to support, so that's not anything I would explore primarily at the moment, especially because the pullback is corrective. Now, if we then zoom in, it is of course possible that the overall wave 2 correction is already over. Well, to confirm that further, I just told you I need to see 5 waves up. That would be in the white count. Latest update suggests that the 3rd wave could actually still be unfolding. So even with one more high, I only have 3 waves up off the low. I need another higher low and another higher high, ideally above the $1 mark, to at least suggest that the wave 2 already formed a low. That's possible because the move down is corrective. It's an ABC structure. So that's already enough. And we dipped into support. That's technically enough to complete this correction. The only reason why I don't prefer it at this stage is because the wave 2 itself, from a duration point of view, is much shorter than the wave 1. That's kind of unusual, not impossible, unusual. And the move down is a 3-wave move, which didn't even touch the 50% fib level. Nearly, it did nearly. But it's, yeah, you know, it so it's not, it hasn't maxed out support. So there is plenty of space still. And the move up is so far only in 3 waves. So all of these factors, so it's dynamic, you know, I might change my perspective, bottom line is that's not so important. It would be great to get another dip because it would allow for another entry point, to look for another entry. But the idea is you never know, right? You never know when the price initially dips into these areas. You never know, is the correction finished or is it just the A wave of a larger correction? Both good, yeah. Both both have advantages and disadvantages. I mean, if the wave 2 already bottomed, then we should see the $2 level next, yeah, in the near future, not the short future, the near future. But from a tactical point of view, that's why it just makes sense to look for entries in these boxes. When the price moves, then it makes sense to adjust the stop loss to at least, eliminate the risk for a losing trade. Maybe even take some partial profits as the price moves into resistance. Not all profits, at least that wouldn't be, in my opinion, necessarily reasonable, because it is possible that it goes up directly. Okay, so partial profits, yes, in, for example, resistance, to at least, take some profits, pay yourselves, and then if the price dips into the support area again, great, use those funds to buy more. Or if it breaks through straight away, great, let it run, adjust the stop loss, and look for other setups. That's sort of from a tactical point of view how you can deal with uncertainty. There's always uncertainty on the charts. Always. We can only identify basically with the wave counts the likely setups, clear setups, and the wave counts give us the support and resistance levels and the roadmap. But there will still be uncertainty, and we can only deal with that only by looking at reward and risk and by using, let's say, clever trading tactics. Yeah, and at the moment, I mean, again, we are approaching the next resistance level. It seems like it can get one more high, even in the B wave. The move down looks corrective from yesterday's high, so I would argue one more high is, or at least it's not topped. It doesn't give me a very clear signal that it has topped here. So in both scenarios, in the one where the wave 2 finished and the one where the wave 2 is still unfolding, one more high seems to be likely at this point. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.